What's going on, everyone? The market was relatively unchanged today, but in today's video, we have some gold for you guys about what to pay attention to the most going forward in the market. We are at a pretty crucial point right now where the past 2 months have been filled with a lot more selling pressure than we've seen basically all year. But at the same time, bulls are not giving up, at least as of lately. So we have a lot to talk about today. We have some awesome setups. And like I said, we have some gold for you guys, so you better stick with us all the way to the end. But with that being said, Tom, let's jump right into it.
Yeah, that market today was pretty wild. It was honestly a big chop fest. We fell down at open, then we ended up recovering all the way back up into this resistance from yesterday, which ended up being the resistance pre-market today as well, right around 425.50. There's been a few bounces here, and that end of day level held up again. And this is right on the trend line on the longer term SPY chart here. So going into tomorrow, we have some pretty big stuff on the economic schedule that is going to make a big effect on the market. So we have the non-farm payrolls coming out at 8:30 a.m. Eastern time with the unemployment rate. These are very, very important for the overall market because it's going to influence what the Federal Reserve kind of does with rates and rate hikes and easing going forward. Or if it doesn't affect it totally, this is definitely numbers that are gonna kind of give people an idea on, hey, how are the jobs numbers doing at the moment? And it's gonna make a big effect on the market, on yields, and we'll see probably a pretty big pre-market move tomorrow. So it's fitting that the SPY closed right at resistance. I know there was a lot of people waiting for that breakout today. It never came, and then a lot of people were waiting for support to give out, and it ended up chopping right back up. So pretty choppy day overall.
Gotta love it, right? But going back to the trading economics site for a second, Tom, and clicking on the unemployment rate, we can see that historically speaking, we are still at a pretty low point of 3.8%. But when we go on, like, let's say a 10-year chart or like a 25-year chart of this unemployment rate, we could see back in history in times of like stress to the economy, the unemployment rate always shoots higher, like it did in 2020, just like it did in 2009 and in 2002 and many other points throughout history. And everyone's looking at this and saying, all right, like the economy is kind of getting squeezed right now. Are we going to see the unemployment rate start ticking higher? And that's what we're going to find out tomorrow. So that's why it's important.
Yeah, and it's going to be really big, Mike. I feel like that it's also even going to start to move yields a little bit tomorrow, right? Like, I feel like if the unemployment data comes out and it shows that the market is getting, let's say, constricted even more, right? That might actually make yields pop or drop depending on how the market reacts. And that's the big thing. How is the market going to react over the next couple days with this data coming out? Because I feel like right now, Mike, it's not even, we keep getting this question in Discord, right? Are these jobs numbers, if they miss, is it bad? Is it good? Is bad news good news? Is bad news, right? It's kind of a weird situation right now where there might be news that is historically bad for the market, but it might prompt the feds to ease even quicker. So it might, there's a few things at play here that are going to kind of obviously be shown, I feel like, over the next couple weeks on which way the feds are starting to look on direction-wise.
No doubt. And no one can doubt that in the short term, the thing that has been driving the market the most are yields, right? And one thing I always love to do is just go to TLT. It's like the easiest thing you could do. If you see TLT falling in a big way, that means rates are rising. If rates are rising, especially in a quick way, that is a bad sign for the stock market. So keep that in mind. And more specifically, when it comes to interest rates, treasuries are down more than 45% from their peak. So looking at this chart right here, we can see that the treasuries are in their largest drawdown that we've seen since the 80s, but it is just such a historical drawdown where the market is like, at least on the treasury and interest rate side of things, is in full-on crash mode, but the stock market is still holding up, at least so far. So that's good, I guess.
Yeah, I mean, it is actually holding up fairly good, and I feel like that's the big thing right here. Everybody's like waiting for that huge drop to come in because I feel like the SPY, it's been pulling back and we've been getting some good downwards movement. But whenever you zoom out and you see how much the SPY has been rising since COVID, honestly, this little drop down we've had is nothing. So I'm with you, Mike. It's like, when are we going to finally see that move to the downside? And to see treasuries down this much is very, very important. And there's a lot of factors that come into play here. But one factor that we saw today that was very interesting is China, right? China with a Y, we'll say, Chyna. But China is apparently selling a ton of U.S. treasuries right now, and that is causing these yields and the dollar to kind of keep rising, and it's having a bad effect on the overall economy.
No doubt. So basically, China has sold $300 billion worth of treasuries since 2021. And the main takeaway here is that as of the past couple weeks and months, they are starting to sell more and more treasuries at a quicker pace. So that's not a good thing. And guess what that does? It directly makes yields go even higher. And guess what? That's not good for the stock market. And China is not the only one to blame here, but between China selling, between quantitative tightening overall, between the recent US credit downgrade and everything else we have going on in the world, inflation, it's making for a nasty storm with interest rates right now, and that affects the stock market in a bad way.
Yeah, it's terrible, and they're trying to do this for export reasoning. They don't want the yuan to be so undervalued compared to the U.S. dollar, which has been rising. There's a lot of reasons why China would do this to us. Maybe they're just pissed, right? Who knows? We've been kind of telling them no with all the Taiwan stuff and everything. There's a lot of reasons why they might want to hit us economically, and it's definitely a scary thing to see whenever China does things like this to us, Mike. And I know that China isn't already liked by a lot of people, and I feel like this is just going to piss them off even more in the short term, but it's having a big effect on our treasuries, and at the end of the day, that is just so important for our economy. I know that, a lot of people like to just look at, let's just say, news every day, right? But at the end of the day, when it comes down to it, these treasuries, bonds, and yields are just so important for the economic structure.
No doubt. And, let's say when you look at SPY or the S&P 500 or any major stock on, a chart that goes back a couple years, you'll see it and you'll say, you know what? It's not too bad, especially if it's a stock that has to do with AI. It might be pretty close to highs, but all in all, the market's been holding up just fine. But what people really don't realize is that the drawdown we're seeing right now in terms of interest rates is worse than the great financial crisis, I can't even talk, that happened in 2009. So basically what we can see on the red line right here is the drawdown with interest rates that is happening right now, and then the blue line shows the drawdown for SPY in the great financial crisis. We are at a more, I guess you could say we're at a worse point now than we were then. It's just the pain is felt in a different way. So you just keep that in mind going forward, because when it comes to interest rates, it affects everything. Whether you're looking at auto loans, whether you're looking at the housing market, whether you're looking at stock valuations, everything's connected. And when you see punches like this, we'll say, it does have important ripple effects.
Yeah, it really does, and it just goes to show you how much pain is coming in here, that it's getting worse. Now, you can see during 2008, since the beginning, right, it was very quick. It was a little bit quicker. This one's more long and drawn out, but it's still pain nonetheless, and it's a pretty bad sign for the overall economy, obviously. And whenever I go back and I just go look at a chart of TLT, it's like, geez, Mike, I mean, it makes sense. And then I go see the SPY, and I'm like, we're still holding up fairly well. Like what the hell's happening? So it's so important here. I know it's not directly like 2008, this situation, but there's a lot of people looking at the market in a very scary way. And it's important to go back and kind of compare the market right now to those times like 2008, 2000, during those times where we had those big bubbles, right? Because there's a lot of people who think right now we're in an AI bubble. Like we go see the stocks like Nvidia and see their levels, and it's like, holy crap, AMD, Apple, Microsoft, Google. I mean, they're still up all pretty good. You know, there might be like little pullbacks, but on the dailies, they're still up pretty decent. So I feel like there just needs to be a little bit more selling pressure coming in to kind of make it normalize, right? But at the same time, the Feds have to start easing at some point. So hopefully they start easing pretty soon, Mike. Hopefully it's sooner rather than later.
Yeah, I mean, the thing is, sometimes the stock market goes up on bad news and it goes down on good news. And when people ask why, it's just how the market works sometimes. It just has a funny way of doing things. But at the end of the day, when you have the economy itself, getting weaker and struggling, it affects the market. There's no other way to say it. And, a prime example would be with the way interest rates have been rising so much, home affordability right now is at its worst point in history. There's basically never been a worse time to want to buy a house right now between many different metrics. But when you look at the price of, your standard house now, and then you look at the interest or the mortgage rates that are currently being quoted, it's mind blowing. And at the same time, it's people's wages aren't really rising at a quick enough pace to actually match that. So it just creates a whole big problem in the housing market, which is, a giant market by itself. So it's something has to give. Either, wages have to start increasing, either interest rates have to start going down, or housing prices have to start going down. But, what we're seeing right now won't last forever because it can't.
Yeah, exactly. It really can't. And I'll say this, if you're young right now and your parents are trying to get you to go out and buy a house, go show them this chart. Go say, hey, this is even worse than 2008 right now, because there's, I'm sure there's a lot of young people out there trying to get houses right now. And I'm sure a lot of our viewers are kind of in that range. It's one of those things where you start to look at prices and you're like, holy crap, these mortgages I'm paying $1,000 to $2,000, $3,000 more on these mortgages now because of the rates. And it's obviously having a big effect, I think, on everybody. I don't know about you, Mike, but to me, the housing sector, I think, is really where people feel it the most during these times. Obviously inflation's bad, like at the grocery store and stuff, but it's just, a little bit more, right? But whenever you go see the housing prices and you see the payments and everything, and you really stack them up, you're like, holy crap, it's mind-blowing in a way.
Yeah, I mean, it affected many people in many different ways. If you already own a house and your mortgage is, low, then you're chilling. You're all good. You should be celebrating. But it's if you don't have property and, you want it, it's now is just an unlucky time because the prices are still high and the rates are a lot higher. So it's some people are good, but other people kind of got screwed out of it. But either way, time will correct everything. And, with everything we said related to interest rates and the market and everything, we're not trying to be all doom and gloom, but there still are some very serious risks that are, all around us in the market right now. The drawdown we're seeing with interest rates is something that we've literally never seen in history. U.S. Treasuries should not have a drawdown of basically 50%. That is crazy, and it is over double the second worst time in history. So it's crazy. But one thing that I'd like to show is a comparison of where we are right now in the market compared to the situation in 1944. So I know a lot of you guys really like these types of charts, and while history rhymes, it doesn't always repeat itself exactly. In the blue line, we could see the stock market right now. And then in the red line, we could see basically what happened to the stock market in 1944 to like 1950. So far, the patterns have been very, very similar, and a lot of people are calling for kind of like a repeat of this price action. While I am not someone to be like, oh, look at this, the chart pattern's very similar, this is exactly what's going to happen, because it's just not true. Like, there's a lot of different, like, the world is completely different than how it was in 1944. But when it comes to financial markets, a lot of times we do see, similar situations progress. So, I do see the market being a little bit stagnant going forward, not necessarily just because of this chart, but, just given everything that we have going on in this current market and economy.
Yeah, I could too. I mean, and then whenever I see the chart here and it kind of just went sideways, it kind of makes sense that might be kind of how we go over the next couple years, with the Feds doing everything they're doing and trying to, maybe get into easing. But until the easing comes in, it's like, who really knows, right? So I'm kind of thinking that we might chop a little bit as well. At least, people won't necessarily see this as chop because, people like to look at 1 minute charts, not multi-year dailies. But, at the end of the day, it will be choppy on like a longer term basis. And I really feel like, though, that on a longer term level, I like how the end of the chart shows a nice recovery back up and out of this, right? Like we're gonna get through this eventually, and that's a good point to still bring up. Like Mike said, it's not all doom and gloom out here. There is a light at the end of the tunnel, and as these stocks dip, it's gonna create some great opportunities, right? Like, it's just right now, like, I just can't buy NVIDIA right here. Like, if it gets to 300 again, though, man, I'm going to start averaging in, that's for sure.
Come on, Tom. You don't want to buy NVIDIA when it's up, what is it, 300 or 400%? What's wrong with you? Come on, we're in an AI bubble. Let's go.
I know, right? 300 is even too high for me, honestly.
So, yeah, I mean, with everything being said in the market right now, it's like, we're just kind of like chilling, and when you look in the sky, you see like some pretty dark and dangerous storm clouds slowly approaching. And normally when you see that happening, you want to take cover, so keep that in mind. But Tom, I think that's enough rambling for us, and let's give people what they want, which are some setups and predictions for tomorrow. One stock I'm watching very closely is SQ, ticker symbol SQ, obviously, but it's called Block. Basically, SQ is very, 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 very oversold. Right now, it's lingering right around $42 a share. It peaked out just under $300 a share back in 2021. I like this stock for the long term, especially at this level. And I think in the short term, it especially has a great risk-to-reward setup. You could set a stop loss maybe at like $40 a share. That's a nice support level. And your profit target might be all the way up to, 46, 48, or maybe even like 51 or so.
Yeah, I like that, Mike. I mean, these are some pretty good ways to do it. And I actually love on TradingView, you can even like draw these out in a pretty good way. And like, look at that risk reward right here. I mean, that is pretty wild. Like, let's say we threw that stop under there, like you said, down under 40. That looks pretty hot. So I like the play, and I think that was awesome to see it come back up today. I'm really hoping Square can, get that momentum back, right? It's been a little while for them. But with my play, I'm going to go with QQQ tomorrow. I know I've been actually liking playing the indices lately, like SPY, QQQ. They've been getting some good intraday, like, movement, even though it's been choppy. There's still been some good opportunities. I noticed QQQ is actually right on a trend line again. They recently dipped under one, and they started kind of rejecting off of it end of day today. So if that rejection keeps holding true, I will look for some movement back down. But at the same time, if the job data, for some reason, if the market has a good reaction to it, and we end up breaking back above like 360 to 361, then I'll go ahead and look at some calls. But it's really reactive on that data and how the market opens. Like, if we reject off this and that data is bad, then those puts will look really attractive, though.
All right, good stuff. Another stock I'm watching pretty closely is XOP. Basically, this is an ETF that follows like the oil and gas industry. and it has been getting smacked this week. And if it breaks below like 135 or so, I will be watching it pretty closely to the downside. The selling pressure in this one is only comparable to like when Jim Cramer says to buy a stock. Like it's been nasty, right? And I think it does have more downside potential, but again, I would like to see a confirmation of a break below 135 to actually play this to the downside.
Yeah, what the hell, Mike? Oil was doing so good, and it's like now these oil stocks, whether it's XOP or ZOM or Oxy or anything, I mean, man, these drawdowns, it's pretty wild to see them down this much.
Yeah, no doubt about that. I mean, these oil stocks were running in a pretty strong way, like a little bit over a week ago, and then they just like completely reversed. So very interesting.
Yeah, it's crazy. But yeah, going to my next one, I'm going to go with Disney. And, Disney's kind of like Square in a way, right? They had a good day today, and Disney has not had a good day. Well, I guess you could say there's been a couple good days mixed in, but not a day like this in a while. I saw some news where they were reducing prices on children's tickets. There were a couple of other small headlines. I think the main thing to see here with Disney is we scroll back throughout history. This major support has been very, very crucial for this stock. If you're looking for Disney shares, I think right now is a great time to average in. I've been averaging in. Even if it breaks under here, I'll still just keep averaging in. Like it's one of those really a stock that I believe in for the long term. And I think even short term here, we're getting a good bounce off that support, some buying pressures coming in. And if we see that this stock moving up tomorrow, I think there could be a good opportunity for a potential move back to the upside. This stock has actually been pretty badly correlated to SPY over the past year, so I actually like it in that way too. Like if the SPY drops, fine, Disney could have a mind of its own.
Yeah, so I can't believe it, Tom. Like Disney was in the green today. Like this is so rare. I had to do a double take. So I will also be watching it though because this stock is very oversold and the setup is pretty attractive. So good stuff there. But let's jump right into the momentum plays for tomorrow. And with the first one, we have Chewy. This is the stock that I've been talking about quite a bit this week. And I have been watching it to the upside, but it's just been moving pretty slowly. So I'm still waiting for that breakout. Tom, what do you have for an upside level on this one?
Yeah, so there's a couple, in the short term, over the past couple days, I really like this 1840 resistance, and it's actually straddling that right at market close here. So I'll be watching that maybe as a bit of an area for support, and then if it ends up really getting a good move and it breaks above 1870, then I think that would be a great confirmation. Just be a little wary, if it runs up in the morning, it could slow down a little bit at 1870, and then maybe break it later in the day. So I wanted to show both levels there, but if we break 1870, that seems like a pretty good level here, and it hasn't been above 1870 in quite a few weeks, actually. It's been lingering down here for a while.
There we go. With the next one, we have Amazon, but to the downside.
AMZN, yeah, go ahead and make them break under 124, just under that low of day from a couple days ago, and if it breaks under there, I could see this stock really going.
All right, Tom, and with this next one, I'm sure you never heard of this stock, but it's AMD for both directions.
Oh, never heard of this one, yeah. If they end up breaking up above 105, go ahead and eye up those calls just above that high of the week. But if they reject and they fall back under 102 even, then go ahead and look at some puts. I really like that 102 level, and then obviously watch 100 after that. $100 will end up being a huge level to watch, probably.
Tom, I'm not even kidding. I would pay to see like how many times you mention AMD in a given week between these videos, the Stocked Up Live, Discord, or just charting it yourself. I would seriously pay for that. Like it's got to be a ton. I can't even imagine. But yeah, so we have that upside level for AMD. We also have the downside level. If it breaks below those or breaks through those levels, there are opportunities. If it does not break through those levels, then do not play it. And then with the next one, we have Amazon to the downside. Again, we have that downside level. If it breaks below it, watching it down. And then we have Chewy with its upside level. If it breaks above it, we are watching it to the upside. But it is now about that time for the big money trade of the day. Today, we have an $880,000 trade coming into Jets, JETS. Basically, this is an ETF, so it's a bunch of airline stocks all in one, and it has been pretty low and been pretty oversold in the short term, so it makes sense to see the big money buy $880,000 worth of the 17 strike call options on this one. They do expire very far out, all the way out to January 17th of 2025. All in all, I think this setup has potential, but you have to give it time. Like, I can see why, big money traders dumping, we'll call it 900 grand into these call options, given where this stock is at, historically speaking. At the same time, though, if you're someone that we'll call lacks patience, then I don't think this trade is for you. But if you can give it some time, I think it does have potential.
Man, lacks patience, Mike. I think that's like 95% of people out there probably lack the patience. But yeah, Jets is definitely down a lot, and 880,000 into these calls is very enticing at the level that it's at. And if we go look at like big support here, it's sitting right around some pretty big levels, like anywhere from $15 to $16 or even $17. We've seen multiple bounces off of each of those over the past couple years, and some of those recoveries off these levels are no joke. I mean, these are some pretty big moves to the upside. So I'll keep my eyes on Jets. It is a little bit worrying, heading into maybe like the colder months here. And then now we're starting to see Jets a little bit lower. I know sometimes, people talk about them upticking more in the summer, and, business is better for airlines, cruise lines, just traveling in general, right? But I do feel like that this could be a good opportunity. And even if we go over to like singular airlines like Delta, they're down quite a bit too. And almost all of these airlines are kind of straddling supports, which is a good sign for these calls anyways. But like you said, Mike, it is going to be something where you have to have a lot of time.
No doubt. All right, well, with everything being said, the market is setting up in an exciting way. SPY is still at a crucial level. We have volatility still here, which is all you can ask for. We have some important data before the market opens tomorrow. So I think we are set for a pretty exciting end to the week. Tom, do you have any final thoughts or anything else you're watching?
Yeah, watch that unemployment data 1 hour before the market opens. It's going to be pretty darn important. Don't forget about that. Don't forget about SPY with the overhead levels, 425.50. There were like 3 rejections there today. Nice triple top if it breaks above. It could be a nice play with those data numbers, but at the same time, if we reject and we start breaking down, it's going to be at the same time an even better opportunity, in my opinion. You could play SQQQ, SPXS, other stocks like that, but let's go, Mike. I think it's going to be an exciting end to the week. Nonetheless, it's been pretty choppy this week, so I'm kind of waiting for one of those like huge moves to finally come in here.
I'll take it any day of the week. Let's get it. So if you guys are new to the channel and you like our style, make sure to subscribe. We post brand new videos all the time. It takes us hours to make these videos, and we try to break everything and all the crazy stuff that we have going on in the world, in the economy. We try to break it down in a nice and simple and applicable way for the stock market. So if you like it, make sure to subscribe and you'll see our videos recommended to you more often. Last but not least, I want to give a giant shout out to today's member of the day, Jodici in the StockedUp Discord. Probably butchered that name, but it's awesome having you in the chat. You've been in the chat for a little over a month now, and keep up the great activity. Besides that, guys, thank you all so much for watching, and let's make the last day of the week a great one.